Hi friends, this is admission of a partner part 4. In admission of partner part 3, with the help of example 1 problem, I explained about revaluation account, goodwill concept, accumulated profit, how to prepare new balance sheet, all these points. Now in admission of partner 4 video, with the help of some more examples, I am going to explain about goodwill adjustment in case of admission of a partner. Now see this second example. Same question I am taking. All adjustments are same except adjustment A. In example 1, he has given that C should bring 40,000 for capital and 20,000 for goodwill in cash, and goodwill is to be paid privately. In example 2, this goodwill is to be paid privately, sentence is not given. C should bring 40,000 for capital and 20,000 for goodwill in cash. Only this is given. In that case, how to treat the goodwill in the books, that we are going to learn. There are 3 methods to adjust the goodwill in case of admission of a partner. First one is premium method. Second one, revaluation method. And third one is memorandum revaluation method. Now, according to which method we should adjust the goodwill, the decision we should only take. Means in question, he is not going to clearly mention according to which method we should adjust the goodwill. He does not use these words. Adjust the goodwill according to revaluation method, according to memorandum revaluation method. He doesn't give like that. By seeing the goodwill sentence, we should only understand which method we should apply. Now, how to take the decision? Let us see one by one. See, in present problem, old partners are A and B. New partner is C. Then, when new partner is admitted into the business, no doubt he brings capital. In all 3 methods, he brings capital. New partner is bringing capital. This is common everywhere. And assume that along with the capital, new partner is bringing his share of goodwill also. In that case, we should apply premium method. New partner is bringing capital and his share of goodwill. Not total goodwill. Remember, new partner does not bring total goodwill. He brings only his share of goodwill. When he is bringing capital goodwill both, then we should apply premium method. And sometimes what happens, new partner does not bring his share of goodwill. He brings only capital. Then we should not apply premium method. Then we should go for revaluation or memorandum revaluation method. Then which method we should follow here? It depends on the sentence in the question. Assume that he has given like this. C has to bring capital 40,000. Goodwill is to be created in the business and written off immediately. Or goodwill is to be cancelled. So what happened here? Goodwill is created and immediately that goodwill is to be cancelled. If there is a written off or cancelled words are given in the question, then we should apply memorandum revaluation method. And assume that new partner is bringing only capital and in question goodwill is to be written off, goodwill is to be cancelled. These sentences are not given. In that case, which method we should apply? revaluation method. Okay? Then premium method. Premium method contains three sub-methods. When goodwill is paid privately, that is premium A. Goodwill is retained in the business, premium B. Goodwill is to be withdrawn by the old partners, premium C. If it is premium method, again we should observe according to which sub-method we should adjust the goodwill here. Then how to identify this? If it is premium A, then in question clearly he gives this word, privately word. One should recall at our example 1. We adjusted the goodwill according to premium A. Because how he has given? C has to bring 40,000 rupees capital, 20,000 rupees goodwill in the firm, and goodwill is to be paid privately. Since that privately word is given, premium A we use there. Now in example 2, we are going to apply premium B. Okay? Why? Because see the question. In question related to goodwill, adjustment number A we should see. What is A? C should bring 40,000 for capital and 20,000 for goodwill in cash. Is he giving that goodwill is to be paid privately? No. Therefore, this is not premium A. Then we should search for this word, withdrawn. Goodwill is to be withdrawn by old partners. That sentence is not given. Withdrawn word is not given. Therefore, this is not premium C also. If it is not premium A, if it is not premium C, then we should go for premium B. He is not giving this word, goodwill is to be retained in the business. He need not to give. But we should understand. Goodwill is not withdrawn by the old partners. What is the meaning of that? They want to retain the goodwill in the business. Okay? Sometimes he may give this word also. Goodwill is to be retained in the business. He gives clearly. He may give that word or not. It doesn't matter. If it is not premium A, if it is not premium C, then it is premium B. Okay? And how to write the journal entries in premium B method? Observe. First entry is for what? New partner is C. When C is admitted, C is bringing two amounts. One is for capital, 40,000 rupees. Another one is for goodwill, 20,000 rupees. So, cash is coming into the business. You know, always from firm's point of view, we should think. So, you are an accountant of the firm, and from C, money is coming to the firm. Cash is an asset. Asset comes under real account. What is real account rule? Debit what comes in, credit what goes out. Since cash is coming, we should debit cash account. Cash account debtor 2. Who is bringing this cash? New partner C. So C capital is a personal account. What is personal account rule? Debit the receiver, credit the giver. Since C is bringing the capital, he is a giver. Therefore, we should credit his account to C capital. 40,000 rupees capital he is bringing. Not only capital, C is bringing goodwill also. Therefore, credit even goodwill account. How much goodwill he is bringing? 20,000 rupees. Total how much cash is coming into the business? 60,000 rupees. This is your first entry. Cash account debtor 2 C capital to goodwill account. What is the narration? Being new partner is bringing capital and his share of goodwill into the business. Then that goodwill, who should take? Old partners. In which ratio? In sacrificing ratio. Why? Because why he is bringing that goodwill? In admission of partner part 3, in that video clearly I explained goodwill concept. When new partner is coming into the business, old partners are sacrificing some portion of profit to new partner. For that sacrification, they expect some compensation from new partner. That compensation money is called goodwill. In which ratio they are sacrificing? In that ratio only they should take the goodwill. No. That is why this goodwill amount we should transfer to old partners' capital accounts in sacrificing ratio. For that, what is the entry? Once goodwill is credited, now this goodwill is to be transferred to old partners' capital accounts. So what we should do? We should debit goodwill. Then goodwill account will get closed. Goodwill account debtor to whom you have to transfer this? To old partners. Therefore, credit side we should write to A capital account to B capital account. How much is the goodwill? 20,000. In sacrificing ratio, we should transfer now. Now, sacrificing ratio is how much? In this question, old ratio is given now. Old profit and loss ratio is equal to 2:3. If new ratio is also given in the question, then we should calculate the sacrificing ratio by using one formula. Old ratio minus new ratio. If new ratio is not given in the problem, then our assumption is old ratio, sacrificing ratio, both are same. Okay? And in present problem, new ratio is not given. Therefore, we are assuming that in 2:3 ratio only, old partners are sacrificing their profits to new partner. Therefore, sacrificing ratio is 2:3. Then to A, how much goodwill we should transfer? Total goodwill is 20,000. In that, A's share is 2/5. Then it will be 8,000 rupees. And for B, what is the calculation? 20,000 goodwill into 3/5. That is 12,000 rupees. These two entries we should pass in case of premium B. Then how to post these entries in accounts? Let us see. First, capital accounts. All these points I have explained in admission of a partner part 3 video. See. Capital accounts we are preparing. So in first entry, you have to search for capital account. Capital account is in credit side, to C capital account. Therefore, this entry in credit side we should post. Credit side by what to write? Other side account name. Capital accounts we are preparing. Capital is in credit. So other side, nothing but debit side. Which account name we wrote? Cash account. Write down that account name. By cash account. In whose column we should write the amount? This is C capital now. Therefore, in C capital column we should write the amount. How much we should write? Don't write cash amount 60,000. Don't write old balance sheet cash value. Which amount we should write? Since in capital account we are posting, C capital amount we should write. That is 40,000 rupees. So first entry posting is completed in capital account. Then second entry, goodwill account at R2 A capital to B capital. We said capital accounts are there, credit side. Therefore, this entry will be posted in credit side. What to write? By other side, that is debit side account name we should write. That is goodwill. By goodwill account. In whose columns? A and B capitals, no? Therefore, write down in their columns. A share of goodwill 8,000 and B's share of goodwill 12,000 rupees. Then to C, nil. Now these two entries we have posted in capital accounts. Then finally calculate the balance carried down. Now A, credit side total will be 85,600 rupees. Then B, 78,400. Then C, 40,000. Now balance carried down. Credit side total minus debit side total. Debit side amounts are not there. Therefore, same total becomes the balance carried down. Debit side amounts are same. Then totals also same. In new balance sheet, liability side, under capitals heading, we should write these three amounts. Then come to cash account. First, from old balance sheet, opening cash balance we should take now. How much it is? 10,000 rupees. We said we should take, since cash is an asset, debit side we should write that value. To balance brought down. Now observe these two entries. In first entry, cash account is there. It is in debit side. Therefore, this entry, debit side of cash account we should post. Now what to write here? Other side, nothing but credit side. Which accounts we wrote? To C capital to goodwill. Write down those two accounts names here. To C capital account. How much? 40,000 rupees. To goodwill account, that is 20,000 rupees. Now in second entry, cash account is not there. Therefore, second entry we should not post in cash account. Balance carried down. Debit side total is more. Therefore, put the total here 70,000. Same amount becomes the balance carried down. Then in new balance sheet asset side, as a cash balance we should show this 70,000 rupees. And once you recollect our previous problem, example 1. In example 1, we didn't prepare goodwill account because example 1 is related to premium A, that is privately. Goodwill is paid privately means what? They don't want to show the goodwill in the books. But present problem is based on premium B, that is goodwill is to be retained in the books. Means they want to record the goodwill in the books. Therefore, goodwill account also we should prepare. Now, see the first entry. We said goodwill account is there, credit side. Goodwill account is credited here. Therefore, this entry, credit side we should post. Buy. What to write? Other side, that is debit side. We wrote cash account now. Write down that word. Buy cash account. But don't write cash account amount 60,000. In which account we are posting now? Goodwill account. Therefore, you should write goodwill account amount. That is 20,000 rupees. Now, see the second entry. In second entry, goodwill is debited. Therefore, second entry in debit side we should post. Debit side what to write? Other side, nothing but credit side. Two accounts are there now, A capital, B capital. Those two names we should write. To A capital account, to B capital account. Amounts are 8,000 rupees and 12,000 rupees. Is there any balance carried down? No. Goodwill account is closed. Debit side total is 20,000 rupees and credit side also 20,000. There is no balance carried down. Means what? Account is closed. Goodwill account is closed. Then this is your example 2. See this problem, example 3. Here A point is new. C should bring 40,000 for capital and 20,000 for goodwill in cash. Goodwill will be withdrawn from the business by the old partners. What is the new point here? New partner is bringing capital, goodwill both, and old partners want to withdraw the goodwill from the business. In that case, how to solve the problem? Which method we should follow to adjust the goodwill? Let us see. See the adjustment number A. C should bring 40,000 for capital and 20,000 for goodwill in cash. Goodwill will be withdrawn from the business by the old partners. C is bringing capital, goodwill both. Since new partner is bringing goodwill in the firm along with the capital, under which method we should adjust the goodwill? Premium method. And in premium method, which sub method we should apply here? See the question. He is not giving that goodwill should be paid privately. Since privately word is not given, this is not premium A. And clearly he is giving that goodwill is to be withdrawn by the old partners. Since withdrawn word is given, premium C we should apply here. Now, why old partners withdraw the goodwill like this? Because they are entitled to take any amount from the business. Why? Partners are the owners. So for their personal use from the business, they may take their salary or any goodwill amount. When partners are taking goodwill from the firm, it is nothing but they are withdrawing some amount from the firm for their personal use. So for drawings, what entries we write? Same entries we supposed to write in case of premium C. So remember, when old partners are withdrawing the goodwill, what is the meaning of that? They are taking some amount from the firm for their personal use. It is nothing but drawings. Now, three things are happening now. First, new partner is bringing capital and goodwill both. For that, entry is the same. In premium method B, there I explain now, same entry comes here. And this goodwill belongs to old partners. In sacrificing ratio, we should transfer the goodwill to old partners' capital accounts. For that, in premium B, we wrote one entry. Same entry is applicable in premium C also. First two entries are same. Now, third entry is the new one. This is for what? Old partners are withdrawing the goodwill now. For that, old partners are taking money. Therefore, they are the receivers now. A, B, A account, B account, both are personal accounts. Personal account rule, debit the receiver, credit the giver. Since partners are receiving the amounts, they are the receivers, therefore their accounts are to be debited. A capital account debtor, B capital account debtor. What to write in credit? Don't write goodwill. Generally, how student thinks, since goodwill they are taking, we should write goodwill here. No, because observe these first two entries. Once we have credited the goodwill with 20,000, then we debited goodwill with 20,000. With same amount, if any account is once credited and debited, then what is the meaning of that? That account is already closed. While writing this third entry, goodwill account is not there. So don't write goodwill. Then what we should write? Think from firm's point of view. Old partners are taking money from the firm. So cash is going from the firm. Cash is an asset. It comes under real account. What is the real account rule? Debit what comes in, credit what goes out. Cash is going from the firm. Therefore, we should credit cash account. How much cash they are taking? Goodwill amount they are taking now. Therefore, for cash we should write goodwill amount 20,000. In which ratio they take? In which ratio we transfer to their capital accounts? In that ratio they take. Means in sacrificing ratio they withdraw the goodwill. Then how much is withdrawn by A? 8,000, and B is withdrawing 12,000 goodwill. These are the amounts. Remember, in second entry, which amounts we credited, same amounts we should debit here. Now, this is a new entry. This new entry we should post in the respective accounts. Now, debit side we wrote capitals. Means in capital accounts we should post this entry. Which side? Since capitals are in debit side we should post 2. What to write? In journal entry, other side, that is credit side, we wrote cash account now. Write down that word. To cash account. In whose columns? We have debited A and B capitals. Therefore, write down the amounts in A and B columns. For C, don't write anything. Then 85,600 minus 8,000 will be the balance carried down here. Similarly, 78,400 minus 12,000 will be the balance carried down here. Okay? Then balance carried down amounts will be 77,600 Now, in new balance sheet liability side, while writing the capital amounts, don't write these totals. Which amounts we should write? Balance carried down amounts. These three we should show in the new balance sheet. Then come to cash account. This is common from old balance sheet. Balance brought down we should write first. Then first entry, cash is in debit, Therefore, debit side we should write 2C capital to goodwill account, 2C capital to goodwill account. In example 2, I explained this. Now, what is the new entry? This one now. A capital account debtor, B capital account debtor to cash account. Now, cash is in credit. Therefore, in cash account, credit side, we should post this entry. What to write? Debit side, what we wrote? A capital, B capital. Write down those two names here. By A capital account, by B capital account. Amounts are 8, 12. Now, remaining is the balance carried down. Debit side total 70,000 minus 20,000, then 50,000 is the cash balance now. In new balance sheet asset side, for cash we should write 50,000 rupees, not 70,000 rupees. Then come to goodwill account. Is there any change in goodwill account? No. In premium C, this is the extra entry now. But in extra entry, we didn't write goodwill word. Since goodwill word is not there, this new entry does not come in goodwill account. So goodwill account is same. There is no difference. This is example 3, premium C. Now next problem is example 4. Here see the adjustment number A. C should bring 40,000 for capital. Goodwill of the business valued at 20,000. So he is not giving that new partner is bringing goodwill. New partner is bringing only his capital. In that case, which method we should apply to adjust the goodwill? Let us see. Example 4 problem. Here A point, what is giving? C should bring 40,000 as capital. Goodwill of the business valued at 20,000 rupees. Observe the difference. New partner, when he is coming, he is bringing only capital. In which method he brings only capital? Either revaluation method or memorandum revaluation method. New partner is not bringing goodwill along with the capital. Therefore, this is not premium method. Okay? It is not premium method. Now, how to decide according to which method we should adjust the goodwill? Is he giving cancelled or written off words? No. He is not giving that goodwill is to be cancelled, goodwill is to be written off. Since these two words are not given, this is not memorandum revaluation method. So it is not premium method, it is not memorandum revaluation method. Then which method is left? Second method, revaluation method. Under revaluation method, we should adjust the goodwill here. Okay? Now, in premium method, new partner C brings only his share of goodwill, not total goodwill. Okay? And when we apply revaluation method, when new partner is coming, he should bring capital and his share of goodwill. No? He has to pay compensation to old partners in the form of goodwill. But he said that I cannot pay the goodwill money. I can bring only capital. Since new partner is not bringing goodwill, what old partners do? They create the goodwill in the business. Not with only C's share of goodwill. They create the goodwill with full amount, total goodwill, they evaluate, and with that full value, they raise the goodwill in the books. Actually speaking, according to 2013 ICAI rules, according to Accounting Standard 10, we should not show created goodwills in the books. Only acquired goodwills we should show. So, when AS 10 is not followed, then this method partners adopt. When goodwill is created in the business with full value, then what are the entries? First entry is cash is coming. New partner is bringing only capital and he is not bringing goodwill. Since goodwill is not coming, we should not credit goodwill like premium method. Okay? How much cash is coming? 40,000 rupees. Then this is the first difference between premium method entry and revaluation method entry. In premium method we used to write cash account debtor to C capital account to goodwill account. Why we are crediting goodwill? Because new partner is bringing capital, goodwill both. But in revaluation method, since new partner is not bringing goodwill, we should not credit goodwill. This is one difference. Then these old partners created goodwill in the business. How much is the goodwill value? 20,000. This 20,000 is total goodwill. Remember this. It is not new partner's share of goodwill. In premium method, he gives new partner's share of goodwill in the question. In revaluation method or in memorandum revaluation method, since we are creating goodwill, full goodwill amount he gives in the question. Okay? Then, this goodwill, who should take? A and B. In which ratio? Not in sacrificing ratio. They should take the goodwill in old ratio. Okay? Why like that? See, new partner C is coming into the business. When C is coming, he should bring capital, no? On what basis old partners demand capital from new partner? Based on the value of their firm. Based on the value of A, B firm, new partner should bring capital into the business. How to evaluate the business? Based on the assets value. Okay? They have some machines, they have building, land, along with that they have goodwill also. Okay? So what they are doing? From 2000 to 2017, they did business. They struggled a lot. They developed the business. Now their business has some reputation in the market. That reputation they want to show in the balance sheet asset side. So they want to show goodwill asset in the balance sheet. Then what happens? Firm value increases. They are increasing the firm value, and according to the new value of the firm, they are going to demand some capital amount from C. Since C is not bringing the goodwill in cash, in the form of capital, they are taking some extra money from C. So indirectly, in this method also, C is paying his share of goodwill to us. Okay? Now this goodwill is known as created goodwill or raised goodwill. But according to Accounting Standard 10, we should not follow this type of methods now. From 2013 onwards, created goodwills we should not record in the books. Only acquired goodwills, only purchased goodwills we should record. When accounting standard 10 is followed, then how to adjust the goodwill in the books? Related to that, I am going to make another video. Please watch that video also. Here, accounting standard 10 is not followed. So partners want to show the goodwill in the books. Even though it is created goodwill, they want to show that as an asset in the new balance sheet. Then we should adopt revaluation method. Okay? Right. Since they are creating the goodwill with full value, we should transfer the goodwill to old partners, not in sacrificing ratio. In old ratio, we should transfer. In premium method, why we followed sacrificing ratio? Because in premium method, this goodwill amount is not the total goodwill amount. That is new partner's share of goodwill. That is why that amount we transfer to old partners in sacrificing ratio. But in revaluation method, this goodwill amount is total goodwill amount now. Total goodwill we should not transfer in sacrificing ratio. Total goodwill we should transfer in old ratio. When you are going to apply revaluation method to adjust the goodwill, then don't calculate the sacrificing ratio. According to old ratio only, we should distribute the goodwill here. Okay? Then according to 2:3, 8,000 goes to A, 12,000 goes to B. Now, these two are the entries and there is no withdrawal of goodwill, no? Therefore, in premium C method, we wrote this third entry. Now, in revaluation method, it doesn't come. In first entry, what is the change? 2 goodwill is not coming because new partner is not bringing any goodwill. In second entry, everything is same. But where is the difference? If you want to transfer the goodwill to old partners, not in the sacrificing ratio, we should transfer the goodwill in old profit and loss ratio. That is a new point here. Now, these 2 entries we should post in respective accounts. Come to first account, capital accounts when you are preparing. In first journal entry, capital is in credit. Therefore, credit side we should post. What to write? Other side, debit side. Cash is there now. Write down by cash. In whose column? C capital, 40,000. In C capital, 40,000. Now, second entry. A capital, B capital, both are in credit. Therefore, in capital accounts, credit side, we should post this entry. What to write? Other side, that is in debit side. We wrote goodwill account now. Write down that word. In A capital, 8,000, B capital, 12,000. Okay? Then, third entry is not there, withdrawal entry. That is why nothing is to be debited here. Credit side totals become balance carried down here. Then debit side balance carried down amounts are credit side totals. Now, these 3 amounts appear in new balance sheet liability side under capital head. Then come to cash account. From old balance sheet, asset side amount 10,000. First we should bring in debit side. This is common. Now come to first entry. Cash account we are preparing. In first journal entry, cash is in debit. Therefore, debit side we should post. Credit side what is there? Only one account. C capital. Therefore, write down that account name here. To C capital. Amount is 40,000 rupees. Now, debit total 50,000. We should write in credit side as balance carried down. In new balance sheet asset side, as a cash balance, we should write this 50,000 rupees. Now come to goodwill account. See the first entry, goodwill is not there. Therefore, first entry we should not post in goodwill account. Second entry, goodwill is in debit. So debit side, 2A capital, 2B capital we should write. That's it. Now in goodwill account, only debit side two amounts are there, credit side nothing. Therefore, goodwill account is not closed. Credit side, by balance carried down, debit side total, that is 20,000 rupees. This is a new point. When any account shows some balance, then the meaning is that account is not yet closed. When it is not closed, then it appears in the balance sheet. We said we should write, see, we said we are writing balance carried down, credit side. Means which balance this is? Don't think that this is credit balance. This is called debit balance. If any account is showing a debit balance, then it may be an expenditure or it is one asset. Now goodwill cannot be an expenditure. So goodwill is what? It is an asset. So in new balance sheet asset side, this goodwill amount 20,000 also we should write. Remember this point? In premium method and third method, memorandum revaluation method, in these two methods, goodwill account will get closed. Balance carried down does not come. Only in revaluation method, in goodwill account, you can see balance carried down. So that amount again we should take in new balance sheet asset side. Next problem is example 5. Here see the adjustment number A. C should bring 40,000 for capital. Goodwill of the firm valued at 20,000. This is to be written off immediately. So what is the new point? C is not bringing goodwill. He is bringing only capital. So old partners created goodwill in the firm. After creating the goodwill, immediately they are going to cancel the goodwill. And another new point is adjustment number B. New profit sharing ratio of A, B and C is 2:2:1 respectively. New profit and loss ratio is also given in the question. Example 5. See this A point. C should bring 40,000 as capital. Goodwill of the firm valued at 20,000. This is to be written off immediately. C is not bringing goodwill in cash. This is not premium method. Okay? C is bringing only capital. It may be revaluation method or memorandum revaluation method. Then see the continuation. Goodwill of the firm valued at 20,000. This is to be written off immediately. So they want to follow accounting standard 10. According to that, this is created goodwill. We should not show in the books. In new balance sheet asset side, we should not show the goodwill. Therefore, they created the goodwill and immediately they are cancelling the goodwill. Since that cancelled word, written off word is given in the question, we should adjust the goodwill according to memorandum revaluation method. This is not revaluation method. In memorandum revaluation method, what happens? C brings capital only. Then goodwill will be created in the business with full value. After that, we should cancel the goodwill. First two entries are same. For revaluation method, what entries we wrote? Same entries we should write for memorandum revaluation method also. Now, third entry is the new one. Third entry is for what? To cancel the goodwill. Once you observe the previous entry, in first entry goodwill is not there. Means goodwill is not yet created. In second entry, by debiting the goodwill account, we created the goodwill. Now we want to cancel this. If any account is debited once, and if you want to cancel that account now, then we said we should write that account name in credit side. So credit side we should write to goodwill account. We created with the full value 20,000. Now we should cancel with full value only 20,000. Then which accounts are to be debited here? All the three partners' capital accounts we should debit. Debit side, A capital account debtor, B capital account debtor, C capital account debtor to goodwill account. So what is the entry for cancellation of goodwill? All partners capital accounts debtor to goodwill account. Now since three accounts we wrote, we cannot apply old ratio here. Now we need new profit and loss ratio. It is given in the question. See, adjustment number B. New profit sharing ratio of A, B, C is 2:2:1 respectively. Since new ratio is given, directly we can calculate here. If new ratio is not given in the question, then we should calculate it. Okay? Now, for A, 20,000 into 2/5. It will be 8,000. B also same, no? For C, C's share is 1/5. 20,000 into 1/5. It is 4,000 rupees. Okay? Now, what is the inner meaning of these entries? Let us see. In premium method, what we did, same result you will get in memorandum revaluation method also. What we did in premium method? In total goodwill, new partner should bring his share of goodwill, and that amount old partner should take according to their sacrificing ratio. Same thing happens in memorandum revaluation method also. Once you observe, old share of A is 2/5 and the new share is 2/5. This is old share, this is a new share. Is he sacrificing any share to new partner? No. His old share, new share, both are same. Means what? A is not sacrificing any share of profit to new partner. Therefore, he should not take any share in goodwill amount. Okay? Then come to B. B's old share is 3/5 and B's new share is 2/5. There is a difference. Old share, new share, both are not same. Means what? B is sacrificing. When C is admitted as a new partner, C is gaining. And from whom he is gaining? C's total share. He is gaining from B only. B is only sacrificing here. Therefore, C's share of goodwill, who should take now? Only B. Finally, that only happened. Once you observe, once we credited A's capital with 8,000, means firm has given 8,000 rupees to A. And in this third entry, again we are debiting A's capital with 8,000. Means what? Again we took 8,000 from A. What is the final result? Firm has not given any goodwill share to A. Okay? Come to B. Once we credited B capital account with 12,000. Firm has given 12,000 rupees to B. Now B's capital account is debited with 8,000. Means out of the 12,000, 8,000 we have taken again. Now finally how much firm has given to B? 4,000 rupees now. 12,000 rupees minus 8,000 rupees. B took 4,000 rupees. Clear? And total goodwill is 20,000, but C's capital is debited with 4,000 rupees. This 4,000 is what? C's share of goodwill. From C's capital account we are reducing that amount, and to whom we gave that amount? To B. Means from C we reduced 4,000. In B capital account we added that 4,000. So when new partner is admitted, B is sacrificing profit, not A. Therefore, from C capital we reduced 4,000 rupees, and to B capital we added that 4,000 rupees. Final result is what? In total goodwill, new partner's share of goodwill is taken by the old partner in which ratio? In sacrificing ratio. Since B only is sacrificing, B is only taking the total goodwill amount. Clear? Then, how to post these entries? First entry, first in capital accounts we will see. In first entry, C capital is in credit, therefore credit side, buy cash 40,000, buy cash 40,000, same. Second entry, capitals are in credit, therefore credit side, buy goodwill 8,000, 12,000, buy goodwill 8,000, 12,000, same. Third entry, capitals are in debit, therefore in capital accounts debit side we should post. What to write? Credit side we wrote goodwill now, write down that account name. To goodwill account, A 8,000 rupees, B 8,000, C 4,000 rupees. Now 85,600 minus 8,000 becomes balance carried down. For B also same, 78,400 minus 8,000. For C, 40,000 minus 4,000. Then balance carried down amounts are 77,600 Now in new balance sheet liability side, under capital head we should show these three amounts. Then come to cash account. First, from old balance sheet, opening balance we should take in debit side. This is common. Now see the first entry, cash is in debit, so to C capital 40,000 we wrote. Now second entry, cash is not there, therefore second entry we should not post in cash account. In third entry also cash account is not there, therefore no difference in cash account. Under revaluation method, under memorandum revaluation method, cash account will be prepared in the same manner. No difference. Then come to goodwill account. First entry, goodwill is not there, so first entry we should not post in goodwill account. Second entry, goodwill is in debit, therefore debit side, to A capital, to B capital, these two amounts, just like revaluation method. Now come to third entry, new one. Here credit side goodwill is there now. So this entry will be posted in credit side of goodwill account. What to write? Debit side account names we should write. By A capital account 8,000, B capital account 8, by C capital account 4,000. Once you observe, debit side total, credit side total, both are same. There is no balance carried down in goodwill account. Means goodwill account is closed. Therefore, in new balance sheet, we should not show any amount as goodwill. Okay, this is your example 5, memorandum revaluation method. With this, all goodwill adjustments are completed in case of admission of a partner. Thank you.